Welcome to Wyckoff TV. My name is Jim O'Brien. Today, I'm going to discuss point and figure charts. These little used but extremely helpful charts help Wyckoff investors and traders identify objectives and when to sell stocks to realize maximum profits. Like many other things, stocks need a cause to have an effect. This cause comes in the form of a sideways movement that is called a trading range. If the stock is preparing for an advance, the trading range is called accumulation. If the stock is ready to react, that range is called distribution. Like a building that needs a foundation before construction begins, every stock will need a base that will support a rally or a reaction. It is uncanny how the width of the base translates to the height of the rally or the depth of the reaction. A point and figure chart is a presentation of price. Volume is not included. It simply shows price changes by a pre-designated number. In most cases, including the example on the screen, the chart records 1 point changes in price in either direction. Putting together a point and figure chart is relatively simple. The chart of American Tower, AMT, is used as an example of how to develop a point and figure chart. On a reaction, a dot is placed in a box that relates to the price of the stock. The dot is not entered until the price moves below the whole number. For example, in this case, AMT reacted to point A. Point A is at the $87 level. A dot cannot be placed at the $87 level until the price moves below $87. In this case, AMT reacted to $86.83, which allows us to place a dot in the $87 box. AMT then rallied to point B. On a rally, as soon as the stock reaches a whole number, a dot can be placed in the associated box. At point B, AMT had rallied to $104.06. This allows placement of a dot in the $104 box. AMT reacted off point B. Dots were placed in the column directly to the right of point B. In this case, AMT reacted to just below $100 per share, rallied to $101 per share, and reacted again to just below $97 per share. It rallied to $98 per share and reacted back slightly below $97. Then it rallied again, back to $100 per share, reacted to just under $99 per share, rallied to $100 per share. Again, each time the price direction changes, the dots are placed in the column to the right. Finally, after several more up and down moves, AMT reacted to point C. Point C is at the $84 level. The low price for that day was $83.07. Once a point and figure chart is established, let's look at how it can be used to identify a stock's potential. Let's review a couple of point and figure charts so I can explain this wonderful phenomena. Yum Brands provides an excellent example of accumulation, establishing a base for a count and setting up an objective to the upside. On the vertical line chart, we can see that after a nice reaction, Yum Brands put in a selling climax at point A. The selling climax was confirmed by the automatic rally to point B and the secondary test of the selling climax at point C. Then Yum Brands moved sideways in an accumulation trading range. Yum Brands completed the trading range section with a spring at point I. It rallied to point J and put in a successful secondary test at point K. Point K is where we can begin the count. Counts are taken from 2 points. In this case, the first is from the secondary test. The second is from the low with a spring. This provides an objective range. In most cases, the count that establishes the stock objectives is divided into phases. The Yum brand's total count consists of 3 individual phases. Phase A is 18 points. This gives Yum brands an initial objective of between $83 and $88 per share. Yum brands rallied to point L and encountered supply. The high at point L was $85.79. This fell perfectly within the Phase 1 objective range. Intermediate-term traders who bought Yum brands on the secondary test would, 60 days later, see a profit of around 15 points or 25%. The Yum brand story is not completed. It began to move sideways and, as you can see by the 2 additional phases, could well have more potential to the upside. Point and figure charts also work beautifully when a stock is going through distribution prior to a reaction. Union Pacific provides an excellent example. Union Pacific rallied to point A and went through distribution. The distribution ended with an upthrust at point G. Upthrusts do not need to be tested, and Union Pacific reacted to point H. The reaction was a sign of weakness. The subsequent rally to point I was a last point of supply. This was the place to take a count on Union Pacific's point and figure chart. The count is also made up of 3 phases. As you can see, Union Pacific reacted through Phase 1 all the way down to point L. To obtain the Phase 2 objective, simply add the Phase 1 count to the Phase 2 count. This gives us a total count of 41 points for an objective of between $83 and $77 per share. At point L, Union Pacific reached $79.31. There was climactic action at point L, which suggested position should be closed and profits taken. After a brief rally, Union Pacific resumed its reaction. In January 2016, it bottomed out at $67.06 a share. This fulfilled the entire count as Union Pacific reached the Phase 3 objective. Intermediate-term traders who went short on Union Pacific at point I and closed their trades at point L enjoyed a gain of 38 points or 32% in about 6 months. Point and figure charts are an important part of successful trades. They especially help in determining when to exit trades and take profits. To learn more about this excellent Wyckoff tool and how it can help you increase your trading success, check out our new book entitled Wyckoff Strategies and Techniques. It can help make you a better trader.